Inflation rips off the poor. Inflation makes the rich richer. These are the wise words of Rich Dad Poor Dad author, businessman, and investor Robert Kiyosaki. The market seems like it's always changing, and for some investors, it can seem scary. But remember, the ups and downs are cyclical, and what goes down usually comes back up again. While it's true that nobody can successfully time the market, there are steps you can take to strengthen your position should a downturn occur. So, what is the secret to successful investing, particularly during a recession? What do successful investors do differently? Robert Kiyosaki, a respected educator in the field of finance, maintains that the key to successful investing is mastering the investment process. Uncertainty arises due to insufficient background knowledge. If you don't have a solid understanding of finances or a lot of reliable information, you might end up losing money. Hello 101 community, welcome back to our YouTube channel. If you want to make smart financial decisions in these turbulent times, we are going to show you 6 recession-proof investments recommended by Robert Kiyosaki. Make sure to stick around till the end to hear our bonus tip. Robert Kiyosaki's recommended side hustle for recession times. Now let's get right into the video. Number 1. Large cap stocks. Large, well-managed, and highly valued businesses have a tendency to produce the best results across all asset classes during economic downturns. Companies that manufacture things that people continue to buy regardless of the economic environment, such as utilities and diapers, do relatively well since individuals continue buying those products despite the state of the economy. Common examples of sectors that could benefit from such stocks include food, personal care products, healthcare, and utilities. Whether the economy is doing well or not, people still have basic needs like eating, brushing their teeth, going to the doctor, and keeping their houses warm. This does not rule out the possibility of individuals altering their spending patterns with a given industry. For instance, as a result of the deteriorating state of the economy, individuals might switch from ordering steak to ordering hamburger, or from shopping at Nordstrom to shopping at Walmart. Number 2. Gold and silver. Precious metals, particularly gold and silver, have long been regarded as a safe haven from inflation and uncertainty. They cannot be created out of thin air like fiat money, and their value is unaffected by global economic events. Kiyosaki has been a gold fan since 1972, buying his first piece in that year. Gold's value has historically risen during times of economic downturn. For example, S&P 500 fell 19% from 1976 to 1978, while gold rose 54%. The S&P 500 fell 19% in 2011, while gold increased 9.4%. This trend isn't universal. Gold did fall during the recession in the early 1980s and the late 1990s, but it holds true in general. As a result, gold can be a wise investment during these trying times. During recessions, when paper assets such as stocks and bonds are depressed, companies and employees are under pressure and they tend to flee to the safety of gold, explaining its recent surge. Gold is essentially a bet on the dollar. Moreover, during recessions, when trust in the Federal Reserve is low, people are more likely to place their trust in non-fiat currencies that are not backed by what they perceive to be failing central bankers and governments. To be sure, precious metals are not immune to this year's sell-off. In 2022, the price of gold is down about 9%, while silver is down nearly 20%. While there are numerous ways to gain exposure to gold and silver, Kiyosaki prefers to simply purchase the metal. He tweeted earlier this year that he only wants real gold or silver coins, not ETFs. Silver was recently described as a bargain by Kiyosaki, so it might be time to pay a visit to your neighborhood bullion store. Number 3. Cash. In times of economic recession, having access to liquid funds is crucial. After all, having a designated emergency fund to fall back on is helpful if you ever find yourself in a position where you need to draw from your assets. More so if you get fired. the standard recommendation is to have enough money in savings to cover living costs for 3 to 6 months. Consider things like a monthly mortgage or rent payment, car payments, insurance premiums, and the minimum payments required on any debts you may have. By setting aside some of your savings for immediate use, you may protect your long-term growth potential by letting your other investments ride out market downturns. You should put the money in an FDIC-insured high-yield savings account. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. You can also support the channel by visiting our merch shop and buy one of our products. The link is also in the description. And now, let's continue with the video. Number 4. Real estate investing. Experts were already predicting the next real estate boom in the months before the coronavirus pandemic. Let's look back at the recent past, shall we? The savings and loan crisis of the 1980s was the first major financial crisis. The Dow Jones Index dropped 23% in value in 1987 as a result of the stock market meltdown. The next significant event occurred in 1999 to 2000 with a dot-com bubble and subsequent crash. The 2007 to 2008 financial crisis was the most recent one. Stock market crashes are common because of the repeating cycles of the stock market. Right on time, here it is. However, Robert and Kim Kiyosaki never felt concerned about it. In fact, they delight in market downturns. Why? Here is the answer to this question. The optimum moment to make a purchase is during a market crash when sellers are desperate to unload their goods and more willing to negotiate a lower price. Kim Kiyosaki and Robert Kiyosaki saw this phenomenon unfold firsthand in 1991 when they relocated to Phoenix, Arizona, and began rapidly amassing a real estate portfolio. Inexperienced investors were contacting and offering to pay to be relieved of their property obligations. They consented without hesitation, and in the end, they were the ones who had the last laugh. Their earnings during this time allowed them to retire comfortably by 1994. Number 5. Market-neutral funds. The idea behind a market-neutral fund is that it makes no difference whether the stock market rises or falls. Because these funds are hedged against overall stock market movements, their outperformance is dependent on their manager's expert stock-picking abilities. In that sense, a market-neutral fund is similar to a hedge fund in that it attempts to hedge against the risk of overall market movements. Their investment structure, on the other hand, is unique and can be complicated. Read the prospectus carefully and gather as much information as possible about how a fund like this will perform when the markets become volatile. And number 6, Bitcoin. Bitcoin investors have discovered the hard way how volatile the currency can be. Bitcoin reached a high of $68,990 in November of last year. It's currently worth around $16,500. However, Kiyosaki sees pension funds as a potential catalyst for the world's largest cryptocurrency. Pension funds are the world's largest investment businesses, he says in a recent tweet while sharing a Forbes article titled, "Your State Pension is Now Gambling on Cryptocurrency." According to a 2022 CFA Institute study, 94% of state and government pension plans have invested in cryptocurrencies. These are numerous ways to gain access to Bitcoin. You can buy Bitcoin directly, invest in Bitcoin ETFs, or own stock in companies that have ties to Bitcoin. And as promised at the beginning, here is Robert Kiyosaki's suggested side hustle for recession times. Kiyosaki likes gold, silver, and Bitcoin, but he didn't say that they're all you need for protection. Gold, silver, and Bitcoin may protect your wealth, but they will not protect your income, he writes. However, Kiyosaki also offers a solution. As the economy, stock markets, pensions, and unemployment rise, a side hustle may provide you with income. A side hustle is something you do in addition to your full-time job for money. It allows you to earn extra money and could even be a way to test the waters of entrepreneurship. Kiyosaki suggests that online education is a recession-proof side hustle because people will always seek out knowledge and new skills, and the internet provides a convenient platform for learning. You can offer online courses or tutoring services in a subject you are knowledgeable in. And believe me, everyone has a skill, a hobby, even you, and you can monetize that. Kiyosaki says that your side hustle could also be any small business idea, such as blogging, making YouTube videos, or investing in a small firm that can turn into the next Amazon or Bitcoin. This means you should keep looking out for new, innovative ideas to invest in as a side hustle without spending an insane amount of money on them. So, do you have a recession-proof portfolio right now? Or are you in the process of building it? Have you started a side hustle? Share your thoughts with us in the comments below. So, 101 community, we hope you can use this information for your personal benefit. Stay educated. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you will be notified of every update. Also, check out the links in the video description. Remember, we live in turbulent times. The global economy is upside down, and we have to make it our personal goal to deliver financial education to everyone who needs it. Watch our video appearing on the screen about the Cashflow Quadrant explained by Robert Kiyosaki. See you there. Thanks for watching.